All right, the Mission Effects live trading session. Welcome, everyone. Prashant has a question. Prashant, you're up first. Let's go.
Yeah, thank you. I have three questions. My first question is, a few weeks ago, you were talking about USD JPY weekly zone. Uh, uh, I think that is hit yesterday or on Friday. Do you still think that that's a good zone to trade?
So the answer is yes from a technical perspective, and I'll show the chart here in a second. So from a technical perspective, yes, there's nothing wrong with USD JPY. The issue is though, for the past few weeks, if you've been watching my YouTube videos, for those of you who keep following along, I've been saying I think there's other trading opportunities that are better than USD JPY, particularly because of all of the bullish candlesticks that have been forming here along this zone. So usually what I was talking about whenever I had first said like, for the past few weeks, right? It was this zone down here. And
No, sorry. I'm talking about the
I,
upper zone that
I
was on a weekly.
yeah, I know. I'm getting there. I'm building up to it.
Okay, sorry.
Okay.
Sorry about that.
It's okay. I'm building up the excitement here. So the anticipation. So the first zone I was talking about was this one right here, right? So the resistance, and I specifically said like I'm reluctant to want to sell this just because of all these little bullish wicks here. And so, as luck would have it, or maybe experience would have it, yeah, price did in fact break the zone. So I avoided a stop out or a loss from this. And now price sits in a new region, and this new region is where the previous high is from back here in 2024. So about almost exactly 2 years ago, price was at here, and we're technically at a resistance zone. So a couple things here. The first thing is price is very bullish, and if we this is a lot of price data, right, going back into last year, but we are just making nothing but higher lows and higher highs coming up into the zone. But that's not even the weirdest part for me. The weirdest part for me is a couple things. So the first thing here on the weekly, we have a little bit of rejection here at the zone, but it's just a little bit of a little bit of a bearish candlestick. Now, normally that wouldn't be a problem, but I think given the totality of the circumstances and how bullish USD JPY seems right now, it gives me just a little bit of hesitation to want to trade it. Another thing to look at here is this was Thursday's candle, this was Friday's candle, which closed a little bit bullish after a very weak bearish closure, right? This is a little bit more of a bull candle than it is a bear candle. We said a little sell off, dip down here just barely on Friday before now market opens yesterday, and now we're pushing up to the upside. Is it a technical good setup? Yes, technically it is a perfect setup. And it might even be good enough for me to just maybe take a low risk trade here and just put a stop. Okay, so normally a trade, if I thought it was high quality, it'd be something like this. Stop above the zone, target at 1 to 1. If I was to take a trade like this, I would just be risking significantly less. I wouldn't risk 100K. I probably wouldn't even be risking 50K. I think I'd prefer to just risk maybe like 25K on this, which is basically just like, it's barely anything, but still like, a little something. Perhaps the 25K risk with a stop like right there, and then maybe a profit target down here, 1 to 2. I just, I don't know why I feel so weird about this zone, but looking at everything, given the totality of the circumstances, I just feel like this has a higher likelihood of breaking out to the upside. And I don't know why. And really the only defense I have for that position is the fact that I've just have experience doing this over and over again. And you'll notice how oftentimes I'm right, right? Not every time, but like I didn't sell USDJPY before at the previous resistance zone,
Correct.
and it would have broken above. Like at no point did it go into enough profit to present a profit target being met, regardless of where the stop would have gone and the 1 to 1 would have been. It wouldn't have worked out. It would have been either a break even or a small loss or a stop out. So that's where I'm kind of at with UJ right now. So when you ask, is USDJPY a good setup? We've been watching it for 3 weeks, waiting for it to get here. From a technical perspective, yes. Am I going to personally take it though? Probably not. We'll see. We'll see what happens with today's daily candle, but probably not. Does that answer your question?
Yes, yes, correct. Thank you. The second one is about USD CAD. So USD CADs just started falling, and if you look at the daily candle today, it's on the upper wick. It's basically pin bar type of candle.
Hmm.
I know in previous video you were talking about we have to wait until it goes down through the zone, come back up, and then break and test towards the downside. But is it possible to like say half the risk right now and then half the risk at later point, like 50K risk right now and then add 50K later once it bounces again?
Yeah, so kind of two responses to that question. So one, is it possible to just do that? And the answer is yes, of course, sure, it's possible. Um, Now, but the second portion to that is like, would I do that? Personally, no. It makes things a little more complicated. So remember, the best trading opportunities arise just because you think price is going to either bounce at a zone or not, right? So if it bounces at support and you think it's going to bounce, it's very easy to get into a buy, stop below, target above. And then if you think it's going to bounce as resistance, you just wait till it gets there, sell at the resistance, stop above, target below. Where this gets a little bit tricky is when you start doing stuff like this trading opportunity here, which is, we bounced like, one or two times in the past. Then we came all the way back up, tried to bounce here, but then broke above. So then it's saying, okay, if it starts to fall, which it is right now, barely, right? It's starting to fall. We have a couple options, right? So out of the millions of things we could do, two of them stand out the most. The first one is just let it fucking break back below the zone. If it does, that'll be a good confirmation that there's actually enough weakness here and that there's enough like sell sensitivity where price might actually continue down. Then we'd just be basically waiting on a better entry for it to pull back a little bit and be up into the zone. Now we have an area where we can actually structure a trade off of, which is support resistance. So we can put a stop nice and clear above this zone, knowing it's a pretty clear valid zone and a target at 1-to-1. So that's the first option. The second option is to do, we'll just use the example you described, which is, let's just, add like a position right here. And instead of risking, let's say we'd normally risk 100K max. Let's say we risk half of that, which is 50K. So if you'd normally risk $100 on this one, you'd maybe risk like $50. And then to say, okay, it could come back in here and it could just test and bounce as support. And if it bounces as support, maybe you try to get out at break even or a little bit smaller of a loss. Then you have to decide where your stop's going to go if you enter there. So where does it go? Does it go right above this high? If so, there's nothing wrong with that. Where does your take profit go? Are you going to set it at 1-to-1 down here, or are you going to try to go for a little bit bigger of a move, anticipating that it'll come into the zone? The other things you have to consider is, okay, what do we do if we enter the sell and then it does start going back below the zone? And once it starts going back below the zone, how the fuck do we add? So it goes below the zone. Do we just add as soon as it breaks or do we wait for a pullback? And if so, where? How much does it have to pull back? Do we just pull back to the beginning of the zone or do we wait for a normal entry and then we add there? And then if it starts going back down, then we add here. If you're not going to be adding as soon as it breaks through the zone, what you could have done is just kept it simple and just literally waited for all that to happen first without you. And then it goes right up here into the zone again. If this happens, right? That's if it breaks below and if it comes back. And those are two very big ifs. But if that happens, then you could have just entered right there. Now you had a shorter trade duration and you had a super clear risk structure, with your stop above the zone and recent high, target at 1-to-1, and it made things way less complicated. So those are my two responses to your question is it possible to do what you said, which is to start a small position here now? Yeah, sure, it's possible. Is it worth doing? I guess it just kind of depends on what you're optimizing for. If you're optimizing for simplicity and profitability, in my opinion, no, it's not really worth doing. If you're optimizing for simplicity and profitability, then it would be better to just wait for something like this because it's just a way clearer risk structure. And the trade duration is also probably going to be significantly shorter than trying to nail this drop here and just praying that it has like an instant move down to a profit target. So those are my responses to your question. What and I'll turn it back to you now. Give it back to you.
Got it, got it. Thank you. Thank you very much for that. And the last question, see, my current problem is when I get an alert on TradingView, I have to actually follow multiple steps. First one is get the alert on TradingView, then go to FX books for to calculate the actual position size, then go to MT5, and sometimes price moves quickly and that position size does not even valid for some time, etc. So rather than hopping on multiple places, can you please let me know the exact steps you follow from getting the trigger to actually placing the trade? Is there any efficiency in that I can bring in?
Yes, there is. There's quite a bit of efficiency, but just by basically removing a step and then knowing how to do another step. So the first step we need to do to change your system right here is you're going from TradingView to MyFXBook or position size calculator, and then you're going to MetaTrader 5, and then you're placing the trade. The first step we need to remove to simplify it is we need to remove going to MyFX book to calculate position size because it's not necessary if you have MetaTrader 5. So here's what we'll do. When you get an alert, it's going to be on TradingView. You're going to immediately go directly to MetaTrader 5. And then here's what you're going to do. My first question, do you have MetaTrader 5 on an Android or an iPhone?
Android.
Android, okay. So I have MT5 on an iPhone, so I know there are small nuanced differences with it, but we'll still try it. Are you able to go to MetaTrader 5 on your iPhone right now?
Yes, give me money.
Okay.
Okay, I'm there.
Okay, and are you on your live account or is it a demo account?
Live account.
Okay, so just be very fucking careful, okay?
Sure.
Okay, so on your live account, just go to a chart, any chart.
Okay.
Now, tap the screen where it says to place a trade.
There are two options on place trade.
Okay, what's the first option?
First option is that allows me to give the stop loss and profit target, and second option is just buy and sell.
Perfect. Perfect. This is perfect, Prashant. We're about to nail this shit, bro. All right, so click
Okay.
the option where it gives you stop loss and take profit to where it shows those lines on the actual chart.
Okay. Uh-huh.
Okay, so it has those on the chart. And now let's just say this is just a wild example. Let's just say we're going to sell. So what you'll do
Okay.
is drag the stop loss up above wherever the current market price is at, where the entry is going to be. So you drag the stop loss up and then just drag the stop loss lower to like a just about 1-to-1 risk reward ratio away. And what you should see is it should display the dollar amount risk on the stop loss and take profit lines. Do you see that or no?
Yes, I see that. Yes.
Cool. So for example, just tell me what the stop loss happens to say right now.
Right now, it says $8.80. So I think I need to increase the position size.
Okay, cool. So now this is where the magic happens. That little sliding thing where you do the position size. If the stop loss and TP thing on the bottom of the screen is too far down, you can click the option to expand it so that way it comes up more. And then there's going to be a sliding scale where you can adjust the
Okay.
volume or position size. Do you see it or no?
Yes. It's a little different. It's not sliding, but I can adjust that. Yes.
Okay, cool. So basically all you do now is you just fuck with that position size thing until it reflects the dollar amount of risk you want. And
Okay.
then you can do that. So for example, let's say how much are you risking per trade right now?
Right now, default trade is 2400, 2400.
Okay, yeah. So for the max trade is 24 and for the lower one it's 1200.
Uh,
Um, is that still how you're doing it? Yeah, right.
yeah, means I wanted to, as per our previous discussion, I wanted to risk more, like around 5000, but that 5000 trade has not came yet. We are still waiting for it.
Okay, so you're doing 2400 then 5000 or 2400
Yeah.
4800. Okay, fair enough. Okay, so for 2400, let's say that your broker has a maximum lot size limit. Some for some it's 75, some it's 100, some it's 150, some it's 200. So if in any case you get to that max lot size limit, which you probably won't, risking like 2 or 3 or 4K per trade. But like, for 3 to 5,000 per trade, you usually won't meet that if you're using like daily charts. But just in case you are, let's say the sliding bar only goes up to like 100 lots and your broker won't let you enter more than 100 lots per entry. Well, let's say like you just drag it up to 80 lots and 80 lots is like half of your risk, right? So you want to risk 5,000, you drag it to 80 lots and where the stop loss is and take profit, it's like $2,500 of risk. Well, then you just click sell. And then immediately right after that, you would click sell again and open another trade with the same stop and same target and same lot size. And now you'd have two sell positions, each of them risking 2,500, meaning you still have a total $5,000 risk on the trade for $5,000 profit. That's why when you see my terminal, sometimes you see multiple positions for one trade, or should I say multiple entries for one position. Because that's how I'm doing the lot size. Because sometimes I reach my max lot size limit and I have to do layers of entries to be able to get filled and executed. So, but that's how you do it, and you can avoid completely ever having to go back to fucking my FX book position size calculator just by doing that we just did right now. Does this completely make sense?
Yes, yes, that perfectly makes sense. Great. Thanks. Thanks. That's what I was looking for. uh, to adjust the position size.
Sweet. Do you have any? I know those were your three questions, but do you have any more?
No, thank you. Thank you for answering all the questions.
No problem, Prashant. Really good questions, man. I'm eagerly awaiting your next questions when we do our next live session. I can't wait.
Sure.
Okay,
Thank you.
okay,
Just
next.
learned something new.
Yeah, well, good stuff. That's why we're here. When people ask questions, some people are just like, "Oh, I feel stupid asking questions," and I'm like, you never know how many other people like had the same question, but they were too much of a bitch to ask, and so you had to ask your question. So anyway, we have Rasmus up next. Rasmus, go for it.
Yeah, what you just explained to Prashant, you explained to me last week, and it works so much easier. It's so easy to do this. I just want to say that I think there are different ways you can place the limit order, but I do market execution. I think that's when you actually take the trade right away. So just make sure that you have that when you take the trade. But anyway, so um, my actual question was, how is it going with Euro USD? And will you take it?
Let's see. I was looking at it, and it looks like it's getting pretty close. Yeah, we still need to wait for it to come back
broke.
into the zone.
It broke under the 1 hour little zone. But yeah, I was wondering if you think you will take it when it comes down a little bit.
You see, this is why it's always more reliable to use higher time frame zones. And I'm not saying I'm a saint here, because sometimes I'll be like, okay, it looks like it's bouncing here at the lower. Let's just enter with a smaller risk here, stop just below, target above, knowing that it could come deeper into the main original zone, and we can just get back into the trade. So I'm no saint here. Sometimes I'll take the trade still. What he's referring to, for those of you watching this video and recording, and those of you here in the live session right now, Rasmus is referring to this zone that we looked at last week. We looked at this, there was this zone here, so price had bounced at like the daily support level, but it kind of broken up above into it and then started to bounce at this little support zone. So he's saying like, okay, this looks, maybe we could just buy right there. Because I think this was on like a YouTube video that I made where I talked about it. The way I generally prefer to do it, again, sometimes I will do this where I'll do like a buy here at the zone and I'll do like a stop loss that's like just underneath the zone like that. So something pretty close to where that went. And the target will be the same target that it would have been if I was trading off the daily. So maybe something like that. And then the risk will be tiny, right? It will not be 50K. It will probably not even be 25K. I might do like a 10K risk, which for reference, that's about 10% of what my usual risk is for a normal, pretty good trade. And so that's kind of how I would approach it. The problem is it just becomes like a pain in the ass factor, especially if you get stopped out after you paid swaps and fees and commissions and sat in the trade just for it to come down into the place where it was having the big bounce. And then you just have to fucking re-enter down there, immediately with a stop low and target above. Rasmus, this is what I kind of want to happen. I want it to come back there into the zone. And if that happens, and it's one big if, I will enter somewhere around here, right? Somewhere in that zone. Might get filled at a slightly different price due to spreads or whatever. But I want it to come down there into the zone. And then if it does, I'll enter, I'll put a stop below, a target at 1-to-1 risk reward ratio. So the trade might look something like this right here. That's what I remain waiting for, Rasmus. Does this make sense?
Yeah, yeah.
Perfect. Did I say your name right? Is your name Rasmus or Rasmus?
Rasmus.
Rasmus. So I'm trying to be all fancy saying like Rasmus.
Or you can say Erasmus, which is say in Mandel language, but you wouldn't say that. So yeah,
You say Rasmus or Asmus?
Erasmus.
Say it again.
Erasmus.
Erasmus.
Yeah, that's it.
Erasmus. Which language is it?
And Norwegian.
Yeah, Norwegian. Well, I'll just call you Bjorn. Let's call you Bjorn. Bjorn, Jarl Bjorn. Okay,
That's
cool. Any other questions?
No, just the current setups, but you basically post about it every day, so I don't really need to ask. I just ask since we are live. So, but if there are other setups you're looking at, then of course.
Okay, well, we'll run through some setups here. If any of the rest of you have a specific question you want to ask me, go to the Zoom reactions where it says react, click the option to raise your hand, and then I'll call on you after we're done, bullshitting and talking about shit. But me and Erasmus are going to go, we're going to look at some charts right now. Okay. So, and one of the funny things, like people ask me all the time, are you looking at this setup, Nick? Nick, what are you doing? What are you doing here? What are you looking at that setup? That's why I basically made my entire YouTube channel and Telegram channel around just basically sharing setups, right? And then here in the Nick's Trades group, I just share the trades, the exact trades and the exact setups and everything. And we've done really good over the past 7 months. It almost brings a tear to my eye. Almost tripled the account. Hopefully we'll get there at some point in the next few weeks. But yeah, all the setups are shared here in Telegram and also on my YouTube channel. I just break them down painstakingly. So let's go ahead and click through these setups here. So we've got USDCHF, which is currently my A1 champion of the world setup right now. I'm just waiting on a price to get into this resistance zone so I can sell. This is where I have my resistance zone drawn. So it's like just under like basically 0.812. That's it. That's on USDCHF. Why? I think it's a pretty clear resistance zone. Feta support, support, support 3 times back here. Resistance, 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 and maybe a couple times a little bit lower, but looks like a pretty clear support resistance zone. A stop will be above, target below, and entry will be somewhere in the zone. GBP CAD, it looks like she is pushing up as I thought. A lot of you guys know that I closed this morning. And the reason you know that is because I called it. I said I have closed GBP CAD here this morning, and we were able to get out just basically break even after fees and commissions, which for me was like 4 or 5 grand. This came out to basically like a couple $1,000s profits, like 5K profit on that. So that was basically break even. What I'm currently waiting for is for price to come deeper into this zone. And I'll show you why I closed it. So we initially got the trade right, and you know what? Had we had the stop loss a little bit shorter and the profit target a little bit closer, it would have hit. The profit target was basically like down here. Or I think it was even closer than that. But basically what happened is we got into the trade, it went into mad profits really quickly. I think it was in like 60K or 80K of profit or some shit like that, whenever it was last week. Then it came all the way back, and I was like, okay. Then this morning, it started coming back down into profit. Then it was in $40,000 of profit. Then it pumped back up. Then it went back down into $38,000 of profit for me, which this, for reference, is about halfway to the profit target, a little under halfway to the profit target. And then we started popping back up here again, close to the entries. And where I called the closure was like somewhere in here. You can look at my trade history for the exact like numerical closure, which was at 1.8760. So 1.8760. So it was actually up here. See, this is why we like to have evidence and we like to have actual data. So it was right there, and it was just basically like before the entries. So it was around break even. So that's what we did on GBP Canadian dollar. And after we've closed, yeah, it ended up going up. So this would have actually gone into drawdown, and it would be in a little bit of a loss right now had we not closed. What am I waiting for? I'm waiting for it to push up here above these recent highs and test this portion of the zone. Why am I waiting for that? Because that is the most extreme make it or break it point of this zone. If we get all the way up into there, that is an area where we can control risk very well, so that if we're right, we're going to make a good amount of profit. And if we're wrong, we'll lose a little bit. So what am I looking for? The entry will be something like that there at the zone. Stop would be a little bit above the zone, and the profit target would be at a 1-to-1 risk reward ratio. So it is likely to be something like this. There's no need to put a stop all the way above that recent high. That was a really, really far spike. If we had another part of the zone right here where price had kind of like popped above it just a little bit and then came back, the stop would go above the zone as well as all the recent highs. This one's just really far though. If we're going to be putting a stop all the way above there, and then now we have to have a profit target like twice as big all the way down here. If you're worried about that high getting tested and you're worried about that stopping you out, in my opinion, it would just be better for you to say, fuck this zone, not take it, wait for price to get to this area. And if it gets to that area, and that's one big if, because it's just an area where price has been to once. We have this zone down here with all the relevance from the previous highs right here. If we get into that zone, you're better off just waiting for that if you're scared to like, oh, I don't want to put my stop past it. Because by the time you've set your stop up here and price goes all the way up into that zone, I mean, my God, like the trade duration is just going to be so long. So I'm not even playing that game. I would be selling right here at the zone. Stop above, target below. This one would probably be 100K risk. I might give it just a little bit of a hair more space, but it'll basically be something like this. Yeah, so we've just used context to kind of help us manage it. Now, is this going to set up? No one knows for sure. It would be absolutely hilarious and in a very scornful, kind of resentful kind of way for me. if it just bounces here at resistance and goes down to what would have been the profit target. But then again, that's trading, so it is what it is. So that's GBP CAD. Euro USD, still waiting to buy there at the support zone like we just talked about with Erasmus. Erasmus. And then AUD Canadian dollar, we're waiting on price to come up here into the resistance zone to sell. I had one of you ask me about this morning. I had a client ask me about this, like, hey, Nick, is AUD Canadian dollar not a good setup? And my answer is, it's a great setup. It's a great setup right now. I'm just waiting for the entry that's going to be up here around these highs. Normally, I'll just wait for price to get halfway into the zone. The fact that we've already come halfway into the zone here and we haven't really bounced a lot. I mean, we had nice clear bounces here initially, like 1, 2 times, a little bit, right? But the fact that we haven't really had a huge turnover here at this zone like we did back here, that tells me that along these highs, like all we're doing is we're just still making higher lows, right? We're not like breaking lower. That tells me this price kind of needs to kind of feel out a higher high. And I do think that once we get up to there, a lot of people will be hitting the sell button and there will be a lot more sell sensitivity up there. So I'm going to be waiting on that to happen. If it doesn't, okay, fine, fair enough. I'll miss the trade. And if it does, cool. I waited, I was patient, and I'll probably be rewarded because I am statistically rewarded more by waiting more. GBP USD, this looks decent for a buy here at support, but I think Euro USD looks a little bit better. So I'm just not going to be trading this. USD Canadian dollar, we talked about this morning with Prashant. I'm waiting on a break below this zone, followed by a test back up to the zone as resistance, and then it falls. This is probably going to take over a week, even if it does happen to set up. If it sets up, it could take a couple of days, but it's probably going to take a week or more. Euro GBP looks pretty decent as well. Very similar to Euro USD, except it's got the Great Britain pound second instead of the US dollar. If price comes down here into the zone, I still think this is a good spot to buy at. It is just such a nice, clearly defined zone. Whenever you dig deeper into here and you do the enhance image thing, you can see down here, price had spiked into the support zone with these wicks multiple times. So yeah, I think it's a pretty good trade. Stop below, target above. GBP JPY selling at resistance up here. Talked about this on YouTube. CHF JPY buying at support. Talked about that as well. Same on AUD JPY, sells at resistance. Euro AUD buys at support. Talked about this in detail on YouTube and in the Telegram. GBP NZD, same thing. Already covered. Just waiting on it to get to support or resistance. And then all the rest of them, I don't really have much. With the exception of USD JPY, if we're feeling daring today, I'm not feeling daring. These little candles make it look like it's not even like, where are the sellers at? We don't even have like one little nice sensitive candle here. They just keeps making like bullish tails on the low ends of the wicks to push price up more. Yeah, it doesn't really look great. NZD USD, we go to the daily chart, nothing. Euro JPY, nothing. NJ, nothing. GBP AUD, nothing. CAD JPY, nothing. And Euro CAD, nothing. And let me just take a painful look at Solana. She's doing okay. Ugh. She's doing okay, guys. Negative 71%. She's doing fine. She'll come back around. Cool. So that's all my analysis for Forex this week. So now I'll hit the stop share button and we're gonna see if anybody has any questions. Anybody have any questions they want to ask me? Since no one's raising their hand, you can just unmute yourself and ask me and I'll help you. I will wait. All right. Well, since we don't have any more questions, I will go ahead
Yeah,
and.
Nick, real quick.
Oh, now both people unmute right after. RJ and Enzo go
That's
ahead to
right.
head. Okay, so we'll go Enzo first, then we'll go RJ.
Stop you right in your tracks. So on USD CAD, you probably mentioned this before that you don't pay attention to patterns at all. But do you take into consideration that USD CAD is forming a huge macro W
Uh,
on the daily? Kinda.
I don't really know, man. Here's the thing. You look anywhere on the chart, you're gonna find W's and U's and V's. So like, yeah, no, I mean, I don't take it into account. And I
Got
think
it.
it's important to clarify the nuance there with like whenever someone says, Nick, you don't really look at patterns. like using those words as like in the colloquial everyday sense, like, yeah, I mean, I don't really look at patterns, but it'd be foolish to say Nick never looks at a single pattern because, you know, if you've got a support zone or a resistance zone, you're looking at that because price tends to have a pattern of bouncing at that zone for some reason, right? So for some reason at this specific price down here, price has a tendency to just bounce right there, right? We don't know why, we don't know what the fuck's going on, but we do know that, yeah, that it's showing a pattern of bouncing there at the support. What a lot of people mean by patterns is they mean like, okay, you know, yo, Nick, you looking for this is turning into a head and shoulders, right, Nick? We got the left shoulder, Nick. Okay, Nick, you with me? Then we got the head, Nick. Now it's gonna come down here. It's gonna fake us out. And the market makers are gonna paint a white shoulder, Nick. You with me, Nick? And then like, and I'm over here just like, I mean, sure, like, yeah, I mean, but like, do I look at that? Not really, but because it's just, it's price, try to get past the zone, it broke it. Okay, so it didn't work. Then it came back below the zone and it might test again as resistance and then respect it there. And maybe that doesn't work, right? But like, do I look at patterns and W's and V's and U's and Bermuda triangles on the chart? No, typically not. So to answer your question, wherever the fuck this W is, you see, I see like a million W's right here on the chart right now. No, it's not really something I factor into it. And I hope I explained why, so that way you understand why.
Yeah, absolutely. Thanks.
Yeah, absolutely, man. Anything else? I'll take that as a no. Okay, RJ, go for it. Go for it, King.
What up, my boy? Good morning, everybody. So my question was relatively somewhat trading, but basically I wanted to ask this. Let's say, for instance, you start making money, and right now I'm a small trader. I'm not too crazy, probably about like just $1,000 in my account. But let's say, for instance, when you started out and when you actually start making money, when it comes to like the taxes part, how does one go about that? I want to necessarily ask you, like, what would, like, you know what I'm saying? Like, what is the whole setup in terms, because obviously it's not like a W-4, it's not a job, you know what I mean?
Yeah, so it obviously depends on where you live. So I'm going to tell you, please, I'm not going to run away from the question. I'm going to tell you, but I do have to say this first. Just for all you guys watching, this is not tax advice. Consult a licensed tax advisor, professional. You know, this is nothing as legal or financial or tax advice. Do whatever the fuck you want. Everyone's tax situation is different. Consult a professional. I'm just speaking out my ass here. I'm literally just making all this up. Don't listen to anything I say. All right, with that disclaimer. So it depends on where you live at. Do you live in the US?
Yes, North Carolina.
North Carolina, cool. So I'm not familiar with state law there. So the only things that I'll be familiar with is federal law as it relates to that. So
Got you.
whenever you trade in the currency markets, right, it's treated as like capital gains tax. So that's all.
Mhm.
And so what a lot of people will do is they'll just trade under their personal social security number. So I assume that's what you're doing. You're just going to report
Yes.
it. Yeah.
Yeah.
A lot of people, there's really no need to make an LLC in trading if you're just trading for yourself. A lot of people think like, oh, it gives you tax benefits. And maybe if you're making like 200 or 300 grand a year and you want to do an LLC with the S Corp election, so you can save a little bit of the like payroll taxes, like you can save like 20, 30, 40 grand a year doing that. But it's not
Yeah.
necessary. So if you're making like 100 grand a year or less trading, which is really good, and almost no one can do that, you really don't need to be using anything except just your social security number. So you don't need an EIN for like a business or LLC or S Corp or anything. So you're reporting it under your social, it's going to go under capital gains, and basically everything for Forex trading is going to go under short-term capital gains, which is trades that you've entered, then you have closed within the time span of 1 year or less. It's 12 months or less. Sorry, there's some background noise, bro.
Hey, babe, could you be quiet, please? I'm talking to someone. Appreciate it. My bad.
You're such a king and a gentleman. Hey, babe, can you be quiet, please?
Try to be respectful.
Yeah, 100%. Okay, and so it's going to go under short-term capital gains tax. So what you would do then, not tax advice, go and consult either a CPA that you can do, or honestly, bro, most people that I know of, they just do it themselves in like TurboTax, because it asks you all the questions like, okay, did you have any other type of form of income? And if you did, right, you can claim losses. You can only claim up to 3,000 against your income for capital gains and losses. So if you lost like 10 grand, you're only gonna be able to write off like 3 grand of it right now in the US. But if you had profits, let's just say 10 grand, easy round number. You had $10,000 of profits, you're going to get taxed at whatever your income level is. So if you're in like above like 650 grand or whatever it is, like me, like you're going to get like 37.5% taxes for capital gains on short-term capital gains and Forex trading or any crypto trades or stock trades that was less than 12 months. And if you're doing it that way under your social, your effective tax rate might be like 20% or 22 or 25%, whatever it is for your tax bracket. And so you would just report it under your social as I think it's a Schedule D. I can't remember exactly what it is because my CPAs and tax attorneys do it all, but I think it's a Schedule D where you report like your capital gains, and that's gain or loss. So if you made 10K, you report 10K, you'll probably have to pay 20 to 25% of that in taxes. So it'll be like a $2,500 payment. And then if you've made estimated payments throughout the previous year, then you're all set because that's what I do is as I make money, I just make estimated payments throughout the year. That way, when it gets tax time, I never get a penalty for like having underpaid. So as long as you pay 90% or more of the tax you end up owing in the previous year, then you're
Yeah.
good. But you can still do it like, before you file your taxes. You just have to like make sure you pay and send in the payment or make it electronically based on whatever your tax situation is. I know this is a lot of shit, bro, but the basic
Yeah, I got you there. I'm listening. 100%.
yeah, the basic answer is it's going to be capital gains tax, and it's going to be short-term capital gains tax in almost every situation. It's just going to be reported under your social. And TurboTax can do it really well for you, or you can just go to like H&R Block or some shit and get a CPA to do it.
Got you. Okay, so I had a second question if nobody else wanted to say nothing real quick. Okay. Let's say for instance you get into a trade, right? And well, it hits your alert, you get into the trade. What is your thought process? Do you shut off your computer? Do you just look at it for a little bit? What do you do after that? You know what I'm saying? Like, cause sometimes, for instance, me, right? I get into a trade and then I start thinking about the bajillion things that could go right or wrong and this and that. I just want to be able to let go of it.
Okay, so this is a psychological problem, not a practice or skill issue. Well, it's a skill issue in terms of your psychological state, but
Yeah.
it's not so much a trading habit thing as it is just like a psychological reframing that needs to happen. Here's the reframe that needs to happen for you, and I'll start by contrasting that to what your current mental perspective is. Your current mental perspective is it's like I want to stay on top of things, I want to get it. I'm trying to grind right now, and da 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 da.
Yeah.
And so what that does is your brain starts asking, okay, it could go to the profit target, but there's also 15,000 different ways it could go wrong. Let's try to prepare for each one. And then you start looking at everything and you start looking at like the 1 minute candles, and then you get like a protractor ruler out and you start
Yeah.
making the different candles, and you're like, man, what the fuck's going on? So you start doing all this unnecessary shit. The antidote and the cure to that, and I think every single one of you on this call needs to hear it if you get into trades and start looking at it obsessively. Here's the antidote. Here's the thing that cures you of this disease of obsession over the outcome of the trade. You have to remind yourself that price is just going to fucking go up or down.
Correct.
It's going to go up or it's going to be down. And half the time it will go against you, and then you will close it, and it will be a slightly smaller loss most of the time. And then the other half the time it will go into profit, and you just leave it the fuck alone. In either one of those cases, neither one of them require you to obsessively focus on every single candle that paints after you enter a trade. So again, the antidote is to just accept that it is just going to go up or down. You trying to do all this shit to try to predict it and looking at the candlesticks and going to a million different time frames and looking at news events to try to predict, you're only going to be right half the time with all those future decisions. So it's better to just stick to your original judgment when your mind was clear before you entered the trade and all your analysis made sense, and then not get like paralyzed after you enter the trade by seeing things as they start to play out. Because it gives you this like uncertainty and this little anxious feeling where you just want to like get the fuck out really quick.
Yeah.
It's just gonna go up or down. Remind yourself that, like, oh, what am I doing? I'm doing all this extra shit. Like, it's just gonna go up or down. If it starts breaking the zone and going against me on the original time frame I entered on, which is usually daily or weekly, then I'll look to close the trade and get out because it's not working. But if we're here on the 1 hour and it was going into profit, but then we have a bull candle back into the resistance zone on the 1 hour, barely, it's a little tiny blip, right? You're not gonna be freaking the fuck out. You're gonna be like, all right, we'll see if it breaks the zone or it'll go up or go down. So that way you avoid all the noise and you just make the decisions that are useful. So
Gotcha.
that's the first component to that. Before that, you prefaced it by saying something that I think a lot of people go through, which is you're just like, okay, I want to know exactly what to do whenever price gets to a zone. And like, what do you actually do, Nick? Like, what do you actually do, like step by step? And it's very simple. And I'm not oversimplifying it whenever I say this. So one of two things: price gets to the zone, and then I go and look at it, and then there's like a huge, let's say it's a resistance zone, for example. there's bull candles going into the zone that are huge, like relative to all the previous price action and previous candles. There's a lot of bullish momentum. There's a lot of buy side liquidity. There's a lot of whatever words we want to use to portray that price is just going up very powerfully at that exact moment. Whenever that's the case, I generally don't enter a trade immediately. I'll say, you know what? Doesn't look like it's bearish right now. It's at a resistance zone, but we're having these big scary bull candles just stampede into a zone. It's kind of like standing in the middle of a highway while an 18-wheeler, for those of you in Europe, that's a huge lorry, a huge semi truck, is barreling down you towards on the highway at 60 miles per hour. And if you're in Europe, 100 kilometers per hour. That's the stupid, dumbass thing to do. You don't want to be standing in front of a truck in the middle of the motorway highway. So if a candle's looking like that, where it's just stampeding and going crazy up into the zone, I don't want to short it immediately. I want to wait for things to quote unquote cool off. I want to wait for the steam to kind of vent off. I want to wait for the price action to kind of relax. These are all ways to describe, hey, when the candles stop looking super big and bullish and fucking ridiculously scary, and the candles kind of start slowing down, they start getting smaller, then maybe going sideways, then we get some maybe bearish wicks on the candle tops, all of this on the H1 time frame. At that point, I will say, okay, it looks like we have enough evidence here to say that price is not easily going to break the zone any longer at this moment. Now we can go ahead and get short. It's a little bit safer. Very rarely do I get an alert at the zone and then enter immediately. Normally I get the alert and then I wait like 15, 30 minutes, an hour, sometimes a couple hours. And the reason I don't do that is because oftentimes, not often, but there are significant enough times that it's worth being careful of whenever price gets into a zone that it just breaks right past it. Like it gets to the zone, you're like, oh, my alert, Euro USD is ready. Then you go check it, and within like a minute, it's already broken down below the zone. That's why I don't use limit orders, and that's why I don't enter immediately at zones. I wait and I look for what some people would call rejection or confirmation or whatever bullshit all the kids are saying these days online about what to do at the zones. But I basically wait for price to just like show that it's not going to easily break the zone and that it might be starting to bounce, and then I'll enter either a buy at support or a sell at resistance. So this was really wordy and this was a lot of context, but I wanted to make sure I painted the picture accurately. Was that useful?
100%, 100%, 100%. And I was gonna say real quick, let's say once you get into a trade and you call it out into your group, how often do you check it? Like when you give an update? Like yourself personally, like when let's say for instance, you go and you see that you're up 30,000, like how often you go and check a chart again, like once you're actually in there? Does that make sense?
Yeah, so I will give you the direct, realistic answer, and then I'll explain to you what I would do if I wasn't in my unique position. So my answer is about once every hour on average, like about, yeah, once every hour. So now, why is that the case? I literally have a business model that relies upon me like calling my trades out live and making sure to be there for management updates and doing it at reasonable times where other people can follow them. And so if I think it's likely I'm going to get out of a trade early and it's going to be like 2 a.m. in the morning by the time the next session happens, and I know a lot of people will be asleep, I have to make a management decision a little bit earlier to accommodate that for most clients and when they'll be awake. And so because of that, yeah, I have a kind of a weird schedule where I have this relationship where I need to check charts a little more often just to make sure I can be on like the knife's edge of the frontier of making sure that all the management updates and everything are in real time and there's zero latency, or at least as little as possible. Now, if I was not running a literal business model that relies on me calling out my trades live, I'd probably only check charts probably a couple times a day, and I probably wouldn't spend more than maybe an hour looking at charts a day, just because it's not necessary. There's barely anything to do. So those are my responses. What do you think?
I appreciate it. I appreciate it. It's gonna definitely help out a lot. Well, that's all I got to say. I appreciate you for the time, and y'all, everyone have a good day. Appreciate it.
Yeah, for sure, bro. It's good seeing you, bro. RJ.
Hell yeah, you too.
All right, so I will sit here for a second. We'll see if anybody else has any other questions. If you do, just unmute yourself and ask me. I will wait here for a second. Let's see.
Hey, Nick, it's me again.
Enzo Ferrari.
My man. All right, so real quick question, right? So we do a little group trading, there's like about four of us. I mentioned this to you before. I know the style of how you trade, you know, daily only, but have you in the past, did you ever try the trading the previous day highs and lows, like marking a box? in the
No,
past?
no.
Okay.
But there's nothing wrong with it. And
Yeah.
a lot of people who day trade stocks and equities do that because a lot of other people are looking at those in those speculative markets. They're looking at the previous high of day, low of day, close, things like that. And so yeah, I mean, if you have a system where it's basically like, okay, if it starts breaking the high of the previous day with some momentum and volume, then we buy and put a stop a little bit below and a target above. There's nothing wrong with that.
Mm.
Forex is just a different kind of market environment. It's a lot more efficient of a market. It's a lot more steady state, and it doesn't rely on trends as much as it does just random data. And so yeah, it's you have to approach it a little bit differently. But if you're a momentum trader and you're trading particularly lower time frames in a market that's like equities, or like futures or something, then yeah, there's nothing wrong with that. Have I ever personally done that? No. My bread and butter is Forex trading, and then I do stocks and crypto as well. But yeah, that's my answer. What do you think?
And how long did it take you? Because I notice, you use pretty tremendous lots. How long did it take you to discipline yourself where you would see, 30K profit, and you hold off and don't close it, because I know I wouldn't be if I seen profits like that, I would close them immediately, probably within the first couple thousands.
Yeah, so it's basically classical conditioning over an extended period of time. So just for context, but like let me just make sure everyone else knows. Like I've been trading about 10 years, little over 10 years. About 8 of those years more or less have been profitable. And like the past few years have been ridiculously profitable when you factor in
Wow.
Forex and stocks and crypto. So with classical conditioning, it basically just says like the more that you get exposed to something, the more you'll tend to have a certain response that teaches you what the best coping behavior is. So for me, I know that like whenever I'm in a winning trade and I close winning trades early when they're going well, a lot of the times it's usually not the best idea because price tends to gone further into profit. And I also know that whenever I'm in a losing trade, I'm like, it's in 20K of loss, the stop loss is at 100K. Let me just hold it a little bit longer because it might come back. Then I swear I'll get out at break even. And then most of the time you don't. Because you're like, oh, but it's going back into profit. So I don't need to close it. So your brain does this bullshit. And then it goes from 20K into 40K loss. And I'm like, okay, now I really can't let it hit stop because like, this needs to come back to the entry because this is 40K of a loss. It's halfway to the stop. And over time, right, I've been doing this when I was risking 1,000 per trade and then 5,000 per trade and then 10K per trade. And now it's like 50 to 100,000 depending on the trading opportunity. And so what I've learned is like a general rule of thumb, which is kind of hilarious because this has been taught for decades and it's not wrong, is when you have winning trades, you generally want to try to hold those ones. You want to hold them a little bit longer, let them run a little bit further in terms of movement. And then when you have losing trades, you generally just want to get the fuck out of those a lot quicker. I'm not saying you press the exit button the moment it goes against you like 3 pips, right? But what I am saying is you want to keep an eye on trades, and if they start going into profit, you want to get into the habit of recognizing like, look, I feel like I want to close it because like this is $10,000 profit,
Hmm.
but it could be a 50K profit if you held it to the profit target. And a trade that starts moving into profit, the closer it gets to the target, the more likely the percentage becomes that it's going to actually hit that profit target. Because the more it goes into profit, the closer it gets. Now you have a closer target and you have a huge stop loss because it has to go all the way back in the open profit to your entry. Then it has to go past your entry into drawdown. Then it has to go all the way to the stop loss. So it just becomes more statistically likely that you're going to have your profit target hit if it starts going into profit. And so it's a habit that you have to get into where you basically flip your brain's psychology, which is served humans for hundreds of thousands of years in a really good way. It's a psychological aspect, like it's loss aversion because I don't want to take the loss, and then profit whenever, oh, I have profit, let me just take it now and not be risky. That worked in human evolution, right? It worked really well because whenever we had plenty of food and we had clothes and we had a nice cave and a fire going and we had enough food to last us a month, we're gonna keep that. We're not gonna go and like risk our lives to go kill another fucking woolly mammoth and get injured or beaten the shit out of it or impaled with a tusk. We're not gonna do that. Or that doesn't make sense, like biologically and evolutionary speaking. And that was for millions of years of human evolution in the past, like roughly 200,000 years of Homo sapien evolution. It didn't make sense to take risk whenever you were already doing good. So when you're in a trade, it doesn't make sense psychologically and biologically and chemically in your brain to hold it. It just doesn't make sense. Your brain's like, no, no, no. We're in profit. We're safe. Let's just take the fucking profit. What's the point of risking it more? The
Mm.
problem is while that served us well in evolution, it's maladaptive to trading. The same is true vice versa of losses. We get into a loss, your brain's like, okay, let's like, we don't want to take this loss. We're already doing bad. Let's just be more risky. Let's hold the trade longer. That worked really well in evolution because if you were starving to death and you knew you were going to die if you stayed there at camp and did not go out try to hunt again, even though you were weak, you were thirsty, you were malnourished, hadn't eaten in 2 weeks, you're skinny as fuck, barely have any energy. You know for a fact if you don't take that extra crazy risk to do something wild to try to get food, you were going to die 100%. So evolution rewarded people who increased risk when they were losing. So when you were in a bad situation, you become more risk tolerant instead of risk averse.
Mm.
And so in trading, that translates to, oh, I'm in a loss. I'm already doing bad. Let me just fucking go. Let me add here to this losing trade. Let me risk more. Let me get that, with like zero plan, zero risk structure. You just start doing reckless things like that. So this is how you have people losing more money when they're wrong versus what they make when they're right. All you have to do is just flip this little switch in your brain psychologically to where you do the opposite. If you're in a winning trade, hold it. It makes no sense intuitively. It works way better in practice in trading.
Wow, great stuff, man.
Yeah, great stuff. All of you guys are just evolved apes here trying to figure out trading with a brain that evolved in an ecosystem. Yeah, we're gonna beat our chest, Vic. Beat our chest because we evolved in an ecosystem where, I don't know, humans did not evolve in like capitalism and trading and market behavior and managing psychology. We evolved in like a very dangerous, grasslands of the savannah and Serengeti in Africa after we came out of the trees, started doing tree climbers. Or, God created man in his own image and Adam and Eve and all that, whatever it is you believe. But the thing is humans have pre-installed with these things that I've just shared with you, and you have to flip that installation inside your brain to reward yourself when you're right by holding your trades, and to reward yourself when you're wrong by just getting out of the trades a little bit early. You should be happy when you get into a trade you risked $100 on, but it was only a $30 loss because you managed it and you closed it a little bit early. You should be jumping up and down, beating your chest like me and Vic whenever that happens, because that is a good thing. It's a good thing to lose. We're happy when we lose here. I'm a loser. I'm just a really good loser. And as Tom Hugard said, the best loser wins. All right, that's all I got for you guys today. I'm going to go ahead and hop off. Amazing live session. I will see you guys in the next one. Cheers, my friends.